What's going on, guys? Happy Motivational Monday. Today I have a very special guest, Jerry Catalano, in the studio. Today we're going to talk to you guys about the 5 best practices for an accountant. So we have a CPA here today. He's going to discuss what the different types of accountants are and what to look for your small business.
Okay. My name is Jerry Catalano, and I'm president of the CPA firm Catalano, Cabor & Company in Lombard, Illinois. A certified public accountant is someone that has to pass an exam after getting a bachelor's degree in accounting, and it is the toughest professional exam out there. It has a 90% failure rate. Once you're a CPA, it qualifies you to do certified audits, okay? And certified audits are something that not everybody needs.
Who would need a certified audit?
Well, let's start. The larger businesses, in a publicly held company that has stock on the stock exchange, needs a certified audit because they're looking to the to the public to say, hey, these numbers are fairly stated. We never say accurate, fairly stated, and that's what the opinion says. For small businesses, it's usually the only people that need certified audits are those that the bank requests. So if you've got bank loans and the bank wants to hold the accountant liable, actually, for what the numbers state in the financial report that's issued, and that calls for a certified audit. There's also a review opinion, which is lower than a certified audit, but still has some basis in reality in terms of what's on the financial report. And there's a compilation, which the compilation is really just taking the company's numbers and putting them into a generally accepted accounting principle financial report. And generally accepted accounting principles are dictated by the American Institute of Certified Public Accountants. Okay, so certified public accountants are first, and then there are people that are accountants or CFOs, and a CFO, a certified financial officer of a company, often are CPAs, but don't have to be CPAs because they don't have to sign off on anything. They don't have to sign off on an audit. They're doing one set of books. And then there are just staff accountants that may have a degree in accounting but never went to get their CPA. They still have all the same educational background we do, except they didn't go the next step. And then below that are the average bookkeepers. Bookkeepers are people that have learned how, have taken classes in running a certain type of software like QuickBooks, for example, or Xero or Peachtree, software packages like that, or simply know how to keep a set of books, how to reconcile a bank, and every element of accounting is needed in that level. Getting the numbers right to start with, getting a foundation is important. So bookkeepers are very important in this whole system.
So if you were to just be starting out and you just got your business up and running, you're a startup entrepreneur, what's the main person to start out with as an accountant? Would it be a CPA, bookkeeper?
Well, you want to have a decent set of books, and usually an entrepreneur or small business owner generally can learn or be taught to do QuickBooks, okay, for example, in that software. And in that case, you can find a CPA firm that will have somebody on staff to teach you, okay, so that, you don't want the CPA necessarily doing the bookkeeping for you, although they can and will, but oftentimes to save money, you want to get yourself trained, and it's best to get one-on-one training. Now, you can go to classes, obviously, but I always believe in, establish a relationship with a firm that's going to be able to train you on being self-reliant as you want to be, or as self-reliant as you have time to be, so that as you grow, you'll need that CPA firm for the tax, because if you're going to be a sole proprietor, you're probably going to want to be a corporation or an LLC at some point in time to protect yourself against liability issues. Once you get into those entities, now you have a different issue in terms of complexities in tax preparation.
So you'd want to start out with at least having a good CPA. The
Right.
bookkeeping you can be taught and do on your own.
Right.
Until you have an established company that
Right.
you can afford to pay the bookkeeper.
Yeah, we like to say, when the startups, we like to help them get a good basic, get their chart of accounts right, show them how to get their stuff entered correctly, and then see them twice a year, once in October, November, when we're doing planning to see what their tax situation is and make sure we can, if there's anything we can do, we got to do it before the year closes. So we want to see them in what we call planning season, which kind of starts October 1st to before the end of the year. And then after that, the preparation of their corporate or entity tax and, hopefully their individual tax as well, because the two are linked up generally for every sole proprietor or every startup business.
So in your experience, the business owners, they also do their personal finances through the same CPA?
Generally, yes. You don't want to have multiples. You don't really need to do multiples from that perspective. You want to find somebody that you can trust and somebody that's a firm. I mean, and it's okay to start with a sole proprietor in that case too. There are smaller accountants that you might be comfortable with. It depends on what your plans are as a business person and what your growth plans are. If you're looking to grow, become something more than a sole proprietor, you may want a firm to grow with. So, if the once a year people, like I say, that I see in October, November, and then do their taxes, a lot of those companies become bigger. I mean, I have one client that started out in 1,500 square feet back in 1995, and today are in 220,000 square feet. Okay, a manufacturer that grew like crazy. So, we started out where I taught them how to be self-sufficient. And as they grew, it turned into a quarterly where we'd get together quarterly, review their numbers, and and now we're quarterly and on the phone probably, during the month, 2-3 times during the month, just on various things that happen. Because once you start making money, the issues grow.
Yeah.
Now you've got estate planning to do. Okay.
Right.
Now you've got tax planning to do. Now you've got family planning to do if you have a family, if you're married or whatever. So,
Right.
And that's where a CPA firm can take you into all of those types of things.
Nice.
Okay. So
I think that's a great tip for our audience, is that you want to find a CPA firm that has the capability to grow with you. If you just find a bookkeeper who's just a bookkeeper and they don't know CPA and you're trying to file it online yourself, like, your books are going to be clean, but you're not going to be taught or educated on how to do other areas. And if you do grow and expand, you're not going to have someone to
Right.
expand with.
and you're not going to get the advice that could take you there. At some point, you get to the point where you say, "Yeah, it's time for me to expand." Well, how do I do that? And this is where a CPA firm is going to have contacts and connections with banks and financial institutions. Is it time for me to borrow? Where do I get a loan? But also, I'm starting to make money now, and I want to save for retirement. What's my best retirement type plan? And what's the best thing for me to do there? All those things expand, where a bookkeeper is only going to be able to get you a good set of books. Now, we actually work with some independent bookkeepers that refer that part of the business to us. They'll be either a hands-on person all year round with the client, and then bring it to us for the advice and the planning and all the other stuff that goes with it.
So for those people out there who already have a bookkeeper, you can obviously ask that bookkeeper if there's someone they would recommend that will work well with them.
Yeah.
And you can grow from there as
Yeah,
well.
and a lot of bookkeepers have good relationships with, standing with accountants, and accountants that'll work with them that won't take their business away, because that's always a fear. If I'm going to refer this out, they're going to take my work away.
Right.
But we have a number of them that refer business to us all the time, and they do what they do, and we do what we do, and we don't infringe on each other.
Don't cross paths.
So don't cross paths, and that works.
So in your opinion, for the people who are out there who are somewhat established but have never hired a bookkeeper, never hired a CPA, if they were to come to you, what would be those action steps to take?
The first step is, are you familiar with QuickBooks? Are you familiar with, or do you have an accounting system in mind, or are you doing accounting on spreadsheets, or how are you accounting for your income and expenses now? Okay, step one. And what do you want to do about that? You want to do it yourself? You want us to do it for you? The second thing is, what type of entity are you? Are you an LLC? Are you a corporation? Are you a sole proprietor? Where's your revenue at now? And so we can determine what's the best fit for you. We always, we don't want anybody to spend more money than they need to when they're starting up, because when you're starting up, you need every dime you got to start up.
Right.
For equipment, for whatever it is that you're doing, okay? So, if their income level is low and in the startup at this point, we'll leave them sole proprietors because they can file on their Schedule C, keep a simple tax return, and wait till the growth happens. We usually recommend that once you have over $50,000 in revenue, at that point you should consider an entity, an LLC or a corporation, an S Corp, a C Corp, and all those things are then discussed on what fits the needs best. Okay?
So anything under 50,000, would they be doing DBA?
They would be doing, well, no, not necessarily DBA. They can still have a registered name. Well, they would kind of be, I guess, DBA, I suppose. It just goes on a Schedule C on a 1040,
right,
as opposed to having a separate entity.
Right.
So that's kind of the break, because it does cost money to incorporate or to form an LLC, and then there's ongoing cost in preparation. There's ongoing cost on Illinois state fees that you don't necessarily need to spend until we get there, until it makes sense, because at some point that entity is going to save you tax money, okay? But once you get above that breakthrough, okay,
right.
And then there's things you want to do beyond that. So that's kind of where I look at it. Instead of spending $1,000 to go get a corporation and do all that stuff, I would hold off until I had enough money to make it worth your while. So if I'm going to spend $1,000, I want to save $1,000 somewhere.
Right.
I want to save $1,000 in taxes somehow. It's got to be worth your while.
For those of you who are starting up a new business and want to learn more about tips and tricks and maybe even looking for a CPA, Jerry's been doing this for how many years now?
Since 1971.
1971. So him and his family know what they're doing out there.
Yeah, right.
So if you are looking for a CPA to work with, if you have questions for Jerry, we'll leave his email in the comment box below. If you guys have any questions, we're more than happy to assist you, and we look forward to seeing you guys next week.
And we have a website too, www.catboard.com, and also my niche website is the Music CPA, because we represent a lot of entertainers and do a lot of work in the film business, and one of our larger clients is a rock band. We're one of the 6 firms in Illinois that's authorized to do the Illinois Film Credit. If any of you out there do production or in Illinois, commercials, TV shows, and movies all qualify for that credit, and you get 30% of your Illinois spend, and you can sell the credit in Illinois for 92 cents on the dollar. So it's a way to fund your production. It's and there, like I say, we're one of 6 that's authorized to do it in the state of Illinois.
So you filmmakers and
Right.
musicians out there, he's
Right.
your niche
Right.
audience.
Right, exactly.
Well, thank you, Jerry. It's nice having you on.
All right, thank you.
Well, take care.
All right.